Hey, all you Wall Street winners out there, welcome to the December 12th edition of Wall Street Winners. Well, let's dive right in. Here we go. I told you last week I thought we were going to get a dip. I said probably 2 weeks, but maybe the coming week. Well, it happened the coming week. I think we're going to still dip a little bit further. Take a look here at this purple predictor. The price action is still pretty bullish, although we broke these little mini lows here. But the purple predictor actually broke to a new low. So the smart money is selling this rally here. That's not good. That's not good. So look for another week of weak price action. Over here, we see something similar up here. You can see that the selling pressure is increasing. Buying pressure is still above selling pressure, so that's still bullish, but just barely now. So we're seeing a weakening situation here as well. And remember I told you about the little green line? Well, the little green line worked again. We get up towards 70, look for the price to sell off. Now, the NASDAQ is actually a little bit different. Here, we see that the purple predictor is weak. There's no question about it. But it's not making a new low here. So we might, I've been mentioning that we're going to see a rotation out of the Dow into NASDAQ, but really into small cap stocks. And this may be the first indication that it's happening. Usually happens second half of December and all the way through January. Very typical type of price action. We got up to my trigger point for turning us bullish seasonally, and we never broke it. So we're still on our neutral seasonality indicator. It works great, this seasonality indicator. So here we can see there's a little dip right here. There's the dip I was looking for, and I think it's going to continue, as I say, this week. And then we're going to turn around and start going right back up again. Now, the great thing about this little dip that we're having right now is I immediately saw all the bears come out of the woodworks again. I saw everybody, we just had a fake rally. That wasn't really a rally. Now we're going to see the bear market. We've got a recession coming up, and we're going to see earnings drop like a rock. And, we're going to see this stock market go make, 10, 20%, 30% lows. And of course, the doom and gloomers always come out and say we're going to zero. And of course, they're always wrong. And they will be wrong again. So what I like about all that sentiment getting bearish is the market hardly moved down at all, even though everybody got far more bearish. This is what's called the wall of worry. Everybody's worried, but they've already spent all their money. They don't have any money to sell new stocks, so we're not going to make new lows. The Fed will ease, or it doesn't matter if the Fed eases. The Fed will talk like they're going to ease, and that's all that matters with the market. The market doesn't look at what's happening today. It looks at what's going to happen 6 months from now. So 6 months from now, we'll be in the recession, and the Fed will definitely be easing. The market knows that. That's why it's rallying. Don't listen to those guys. Keep their track record. See if they're as good as Wall Street winners. The answer? No, they're not. Of course not. Okay. But a lot of money went out of the stock market into the bond market. So for the first time in a long time, in months, we're seeing a lot of money leave the stock market. So a lot of selling came from the stock market. So what does that mean? That means that it's bulls which are the sellers, not bears. It's bulls. People that bought at the low, they're taking their profits. It's not new bears that are hammering the market this last week. It's old bulls. That means it's unsustainable, and this market's going to turn around again. Think about it. Stock market risk indicator still very stable at low levels. They still like consumer staples. They still like Utes, things like that. Global shares looking still very good, better than the U.S. stock market actually. Why? Because the ECB has been tightening the screws very tightly, and now they're going to do the same thing. They're going to loosen up as well, and we're going to continue to see Europe rally. Now, we do need to see some type of a little bit of a dip. Look at how we got to 70, little dip, 70, little dip, 70, little dip. I think with three of these, we should see a little bit bigger dip over the near term. Yield curve remains telling us that this recession is going to last a long time. This recession could last the whole year next year. In other words, it will be one of the longer recessions in history. Once again, that's bullish for the stock market. Bonds. We've been telling you for quite some time, about a month or so, that bonds would continue to rally up. We've now gotten up to the 70 point up here. I now believe that bonds will go sideways for a while, not go into a bear market by any means, but they're going to go sideways for a while, probably 2-3 weeks, maybe a month, something like that. But let's say 2-3 weeks is my best prognostication at this point. And so that's what's going to happen here. I just don't want to trade the bonds. I don't find them all that interesting right now. Our bond indicators, 10-year treasuries in Germany are saying lower interest rates. CRB is saying stable interest rates. Gold is saying higher interest rates. That's, you see, kind of a mixed bag. That's one reason why I think we're going to see interest rates stay roughly where they are right now. The dollar will continue to move lower. Why? Because bond yields are still going up overseas, whereas they are stabilizing in the U.S., thus shifting interest rate momentum toward foreign countries, and that's going to keep pressure on the dollar. I kept you long the dollar all this year, I should say. Now I'm going to keep you short the dollar, and I've been short the dollar, for 2 months. So hang on to Wall Street winners. It makes you money. Now, if the dollar's going down, that means gold's going up. We are now, I have yet to put on a gold position, but I have orders in, and I'm going to add to those orders to increase my chances of getting long gold. Now, we've got up to these old highs over here, but I think we're going to break those very, very soon. We got up to 70. We had the sell-off. We got up to 70. We got the sell-off. Now we're going to rally up, but this time we're going to get up here before we hit 70, and that means we're going to break through these old highs. So technically it looks very good. Once again, the gold market's looking down the road at Fed easing. And they're going to ease. And that's going to make gold far more attractive because real interest rates are the most important factor affecting the price of gold. And over here, I wish I could patent these, but I'm not allowed to. We have clearly this indicator here. This is a euro versus dollar, very, very bullish. This one's a little bit bearish. This is the CRB, a little bit bearish. This one's solidly bullish. So 2 bullish, 1 bearish. We need to be long gold. Not wildly, not crazily, but we need to be long gold. So once again, I'm putting in more orders so that I can get long. Crude oil, I think this is going lower. Purple predictor had been supporting, but now the purple predictor is coming down harder than the price action is coming down. That means that they're selling. Now, I'm not in Dubai right now, although that's where my official residence is. I'm in Southeast Asia in the Philippines. But we look everywhere and we see indications that oil is going to go lower. It's going to go lower because demand is going lower. So we were able to keep the price of oil up over here when the Saudis cut back, or when OPEC Plus cut back production by, they said 2 million barrels a day, but it was really only 1 million. I counted them. I went out there and counted. And but now even that's not enough. They're going to have to go back and really cut 2 million barrels a day at a point when Russian oil is increasing. We're seeing an increase in oil is going to be coming in from Venezuela. We're going to see an increase in oil coming in from Iran. There's a number of countries that are increasing their oil production, and they're going to just keep pumping oil no matter what OPEC Plus says. So look for oil to move down to $60 a barrel. Bitcoin, I'm getting more bearish. We're still in a phase where interest rates are going higher. We're seeing the miners get killed, but they're still producing. So I think we're going to get one more last washout, a real capitulation. Now, this was pretty much like a capitulation. Look at the heavy volume, the collapse below all this major support at about 18,000. But I think both the fundamentals and technicals are bearish here in Bitcoin. I'm not short Bitcoin right now. I have no position. But if we break these lows down here, I will get short, looking to take profits at somewhere between 10,000 and 13,000, which I believe will be the eventual low in this marketplace. The way we stair-stepped down, and now we're seeing support in here at a solid number, suggests to me manipulation. If I was the head of Binance right now, I'd buy Bitcoin like crazy to stop this terrible bear market. And they've got the money to do it. Now, I'm not saying they are doing that. I'm just saying if I was the head of Binance, that's what I would be doing right now, because there's more bankruptcies still to come. We don't even know the beginning of them. And we don't know the beginning of the fraud charges and the people that are going to go to jail as a result of the mismanagement and fraud that we're seeing in the crypto exchange market. So I think that that's going to still come in, and we're going to hammer this one more time. All right, freebies. I keep guiding you. I keep telling you which way to go. I twist, I turn. I get great exercise telling you where to twist and turn. But, really, come on, pony up a few bucks and sign up for Wall Street Winners. I want to tell you about a concept that we call extreme profits. I'll tell you what it's generically called in a second. But this is the most powerful risk management tool ever invented. Now, normally I use a technique, and what I teach in most of my courses is a technique called fixed fractional. And I teach that technique for a very simple reason. It's the best balance between a risk and reward, the best balance. But extreme profits, this technique is not about balance. It's about extreme profits. So it's kind of insane, but it can, if you do it right. You have to do it right. So there is a caveat there. You have to do it right, and then it becomes the most profitable system ever. Now, this is based on research by John Kelly, who was a Bell Labs scientist, and it was perfected by my friend Ed Thorpe, who was the guy who really popularized card counting in blackjack. And it's called the Kelly formula. You can Google it, and you can learn quite a bit about it online. And what the Kelly formula does, though, is it's not designed for this balance between risk and reward. It's designed to maximize profitability. So it turns risk management from a defensive weapon into an offensive weapon that you can wield to maximize profitability. Well, it's, nothing is for free. So the bad news with this technique is that there's much higher equity volatility. If you did it the way Kelly and Thorpe used it, you could see your account drop 50% in one day. Now, that's not the way I use it. I've completely modified it so that it's far more relaxed. Still higher equity volatility than I normally have and what I normally teach, but much less than the way it's taught by John Kelly, Ed Thorpe, etc. The good news, if done correctly, it can lead to dramatically higher profits. I said a second ago that you could lose 50% in one day. Yeah, but you could also double your account in a day as well. So, as you can see, it's dramatic in both directions, but do it correctly. Now, the Kelly formula was actually invented for as a formula, John Kelly, to how to get more information to go through a copper wire. He worked for Bell Labs, and so they were trying to figure out how to get more information to go through a copper wire. But then guys like Ed Thorpe and other mathematicians came along and realized that it could be used for gambling and it could be used for investing. And Ed Thorpe built a tremendous career as an investor. I wouldn't even say he was all that good of an investor, but he used the Kelly formula better than anybody I've ever seen. So that's what it's all about. Now, hang on. See, I'm going too fast. I'm too excited. So how can you get this? We've put together a course on extreme profits. Many years ago, I did a course quite often. It was a $5,000 course, and we did it on futures and Forex, and it was incredible. I mean, it was just an incredible course that cost $5,000. Well, what we've done is we've now adapted this for stock traders. This is amazing. Nobody's ever taught anything like this ever. Now, in order to get this, you have to join the Wealth Builder Insider Membership Program. And that's a modestly priced monthly membership program. I'll show you the URL in just a second here, and you can click on it. But you get this course, which we're posting pieces of it every day now, on the website. And you get that, but then you get the most extensive education on stock and option trading in the world. This membership site, well, I'll be frank with you. The problem with it is that there's too much. You get too much. So we even had to add a section on how to actually attack the website, because it's going to teach you asset allocation, stock selection, swing trading, position trading, multiple techniques for stock selection, ETF trading, everything. It's really, quite frankly, a bit overwhelming. So the very first section, which we call the hub, tells you how to attack it in a logical manner, depending on what you're most interested in. And of course, we also have options trading on there as well. And that's all for one low monthly price. This is like getting 10 PhDs for a peanut. So where can you get this? Well, it's pretty simple. You just go to wealthbuilderinsider.com. wealthbuilderinsider.com. You don't need the capitals, but I just made it capital so you can read it easier. But go there, check it out. Remember that what's not on this website here is we've just added our Extreme Profits for Stocks course inside the Wealth Builder Insider. All right, everybody, go there now. I'll see you inside.